Welcome. Thank you for joining us here today for our webinar here on Cultivated. Give me one sec, make sure everybody's in the right place backstage and everybody has time to join us here, I don't know, in the audience as well online. Okay, I think we're ready to go. Welcome to Aligning Banks and Cannabis Operators for the Next Phase of Industry Growth, our latest webinar with our partners at Shield Compliance. My name is Jay Rosenthal. I'm the co-founder and managing director of Cultivated Media. You can find us at cultivated.news. And for the purposes of this webinar, I'll be your host and back-end technician and a little bit of producer. Way back in March 2025, many of you joined us for a webinar called Choosing the Right Cannabis Banking Partner. I will link to that webinar in the chat as I think it's instructive. It's an instructive place to start understanding the relationship between cannabis operators and financial institutions. And today, we'll take that one or perhaps many more steps forward because Shield Compliance has completed their annual cannabis operator survey. And Tony Repanich, the CEO of Shield Compliance, is here to share the results, what they've learned, and importantly, why it matters. Because with the ever-changing regulatory and compliance landscape, including maybe this week, next week, January, who knows, having an up-to-the-minute look at the banking landscape and how cannabis businesses can access banking options, not just around deposits, but also other banking services is super important. So we're excited about what we have in store for you today. And here's what's coming up. In a moment, as I mentioned, I have Tony Repanich, the CEO of Shield Compliance, on deck to give an overview of the results from their annual cannabis operator survey. Then we'll jump into an incredible panel conversation, which Tony will moderate, that will include two leaders that help cannabis businesses set up their financials, among many other things. They both worked with a wide array of operators throughout the supply chain, so they are well versed in the unique challenges many operators and frankly, many financial institutions as well face when working in the cannabis industry. So we look forward to having Jay Caplan and Jacques Santucci join us after Tony's presentation. Now, it's my pleasure to bring up Tony Repanich, the CEO of Shield Compliance. And as the CEO of Shield Compliance, Tony leads day-to-day operations and is the company's principal product architect, having previously served as a senior executive at a Washington state-based community bank for 25 years. Tony has in-depth knowledge of the banking industry and the regulatory and compliance requirements for high-risk industries like cannabis. Today, he brings that knowledge to financial institutions, serving and considering serving the legal cannabis industry, which is why we are so lucky to have him here today, and importantly, to call Shield Compliance a Cultivated partner, and to have Tony share the results of their annual cannabis operator survey. So, without more of me, Tony, over to you.
Jay, thank you so much. Really excited to share with all of you the results of our 2025 licensed operator survey. Each year at Shield, we reach out to licensed operators around the country to gauge their satisfaction with their financial services provider, really with the goal of helping our bankers adapt their products and services, their compliance expectations, so that they can be a good partner to licensed operators in the space. And so happy to share some of those results with you today. First, we really do try to get a cross-section of the market. So folks that are both in the medical and the adult use space, and also looking at folks that participate in the wholesale side of the market, understanding that while everyone has challenges with financial services in the cannabis space, there are unique needs depending on if you're in retail or wholesale. We also try to look across the country and get a wide selection of folks, understanding that the financial institutions that exist in different markets may make access to certain financial services easier or more difficult depending on the number of competitors that exist. We also try to look across different revenue types, understanding that those businesses that have exceptional revenues in the space have many people calling on them to earn their business from a banking standpoint. But as you get into single state operators or single location operators, your access to financial services or your experience may be different, and we want to understand how those differences might play out. So first, we really try to gauge the customer service the overall client satisfaction that these licensed operators have with their current financial services provider. I should mention that as part of our surveying work here, we believe that in almost every market now, if you want a bank account, you can get a bank account. And so if you don't have a bank account, we are excluding you from the survey. Or if your bank or credit union does not know that you're in the cannabis industry. So we're really looking to gauge the satisfaction of those licensed operators that have an open relationship with their financial institution about what their business does. And then we can gauge what their satisfaction is. The really good news is we see very strong satisfaction from these licensed operators with their bankers. And so that's a real positive for bankers serving this industry, and hopefully the experience that licensed operators are having as they work on a day-to-day basis with their bank or credit union. We also are trying to gauge how do they feel that products and services match up to the needs that the licensed operator has. And while that's not as high from a very satisfied standpoint as the overall customer service, when you combine that with the satisfied and very satisfied together, still represents a majority of the customers feel like they have access to products and services that meet their needs. And then from a fees and services perspective, maybe not surprising, there are a number of operators that would like to see continued relief on the fee side. And so we still see a large share of folks saying that they're very dissatisfied or dissatisfied with the fee environment in this industry. Although I think most licensed operators, when we have one-on-one conversations with them, will acknowledge that fees overall have gone down over the last few years as more competition exists in each market and as bankers become increasingly more comfortable with this industry. We also looked across different products and services that we thought maybe licensed operators would want to see their bank participate in. When we asked about payroll services, most of the respondents said either they already have this service from their financial institution or they're just not very interested. It wasn't top of mind for them. Where they did have a lot of interest is around retail payments and B2B payments. And so continuing to streamline those options, and of course the costs associated with those options were important. And today, very few of the licensed operators said that they were receiving those services if they were using them from their existing financial institution. Also, still good demand for a money market or savings account. Not surprising in this interest rate environment for those licensed operators that have reserves. Having everything in non-interest bearing accounts is as an opportunity cost for the licensed operator. And so again, our bankers are seeing more and more of their customers ask for access to those interest bearing account types. The likelihood of changing banks is something that we like to look at. In the early days of cannabis banking, for many of our bankers in the space, there were so many new businesses being created. And while that might still be true in places like Minnesota and New York, and many markets, the licensed operator community is not growing, and in some cases it's contracting. And so now to grow your book of business, you need to go out and steal customers from other financial institutions. So what percentage of those businesses are very likely or somewhat likely to change banks or consider changing banks in the next year? And so we still see that there's a high percentage of businesses that are considering that, even though we all know it's a difficult proposition to change financial institutions given the high risk nature of these businesses. So, however, it does indicate that there's interest here from licensed operators to change financial institutions. What we saw when I was at the bank dealing with non-cannabis clients is we expected every year about 10% of business clients were in the market every year looking for to potentially change banks, either to save money, get access to new credit products, something that would help them grow and scale their business. And so here we see really double the amount of customers here having that inclination. We also want to understand what kind of retail payments different licensed operators were accepting, and probably not a surprise to this group, there is still a high percentage of retail operators that are accepting cashless or cardless ATM. Understanding the risks that are associated with that, that still seems to be the predominant payment type that's offered in the space. We still see a number that indicate they offer PIN debit. Oftentimes, as many of you know, PIN debit in its traditional format has not been supported by the national networks. And so oftentimes those are workaround solutions that may also fall into that category of gift card or stored value, some sort of intermediate vehicle in between. But again, a number of folks at least offering that to their consumers. ACH wallet or pay by bank has been growing in popularity. Although today only 30% of licensed operators say that they are currently offering that, and previously have not offered that. Similarly for crypto, most licensed operators have not offered some sort of crypto solution, although we're seeing in general purpose retail today outside of the cannabis industry an increased interest in crypto, given the sort of explosion of stable coins that are occurring in the market right now with some of the major players in the space. And then a majority of store owners indicated that they have an in-store ATM. And we know for many operators that both as a way to facilitate not having the consumer necessarily need to come to the store with cash, but also provides additional revenue for the license holder in that store location. On the wholesale transaction side, surprisingly, we still saw a number of licensed operators who said when they are paying for a product from other license holders that they have used cash, and we see a lot of check and wire transfers being used in addition to ACH. And so the bill payment is something that most banks have turned off for licensed operators, given some of the counterparty risk that exists there. The counterparty the bank works with won't allow those bill payment systems to be used. So not surprising that a large percentage of licensed operators have not utilized traditional bill payment for those transactions. We also kind of wanted to make sure we had alignment. You know, if I say that I'm a licensed operator, when I go to pay for things, what am I using? Similarly, if I'm a licensed operator and I'm getting paid, what am I seeing in terms of payments that I receive or I'm willing to accept? Fewer licensed operators actually said they would accept cash than those that said that they would use cash, but not surprising, checks and ACH continue to prevail as the most common form of payment in the space. You know, we also kind of want to get a better feeling on how the industry was looking at rescheduling. We all know that rescheduling has a giant impact on the cash flow for these licensed operations. Only 34% of respondents said that they thought we would have rescheduling. Now, kind of have to date and timestamp this. We did our licensed operator survey in July and August, and you know, things continue to evolve at the administration's level, at the legislative level, around whether or not we'll get some sort of relief on rescheduling. But at least this summer, they were pretty pessimistic about the likelihood that we would get rescheduling this calendar year. Similarly, in importance of 280E, 61% of the licensed operators said it was extremely important to their business that be resolved, and the majority said it was somewhat or very important when you combine that with extremely important. So we all know that rescheduling has a major impact on cash flow for licensed operators, and also that change in cash flow for licensed operators changes bankers' appetites for lending to the industry, more cash flow, better credit risk. We also want to understand, we were hearing lots of talk this year about folks moving to ESOPs, and trying to understand if companies were really looking at this as a way to avoid 280E and not wait for something to happen on the rescheduling side or something specifically legislatively that would attack the 280E problem. And we saw a good number of businesses said that they were looking at this as a strategy for tax avoidance or tax reduction now and going forward. We also want to understand about credit availability and the availability of credit in their market. We saw a large percentage of licensed operators say that bank or credit union credit is not available to them. And so considering that also many licensed operators lease their facilities and a lot of bank financing is real estate based, not surprising that many of the licensed operators said that actually obtaining bank or credit union credit facility was not available to them. When we tried to drill down a little bit further and understand, well, what types of loans would you like to have access to should your bank or credit union find this something that's of interest to them? Operating lines of credit, so those things that support accounts receivable or purchase of inventory, rated number 1. Equipment financing was a large portion of it too. And then a smaller but still large portion said that they wanted real estate lending. And you can see of our respondents, only a very small percentage have actually obtained a credit facility from their bank or credit union. We also kind of want to understand the owner lease dynamics that were happening with these operators. As I mentioned before, the collateral that bankers are going to be most comfortable with out of the gate is going to be real estate. But if you're leasing, you don't have that real estate. And so we really did see it's about a 50-50 split between those who own and those who lease their facility. What also was the likelihood of a licensed operator acquiring a new facility in the next year? We didn't differentiate between whether they would lease that facility or buy that facility, but we know that activity drives the need for credit, either from the landlord or for those tenant improvements or the licensed operator to acquire that facility. And there was a large percentage of operators who said they were very likely or likely to acquire a new facility in the next year. So 47% said that they would be looking to do something on the facility side. So we shared that with our bankers as opportunity in the market, given those investments that licensed operators are likely going to be making in the year ahead. We gave our licensed operators also a list of variables that could be keeping them up at night, and really wanted to understand what their primary concern was as we look at the year ahead. The 1 and 2 items that they flagged as being most important to them, and obviously these two are highly correlated to each other, are cash flow and profitability. And so if you combine that with the expectation that we've got challenges on the 280E side that are going to persist for some time, that continues to impair cash flow. So licensed operators are highly focused on retaining cash and having positive cash flow for their business and driving towards greater profitability. And so I think we see that even in the reporting that Cultivated does, that licensed operators have an increased focus on business operations and the cash flow and profitability that comes from those operations. And then we also asked our licensed operators to take a longer term view. What do we think that's going to happen with profitability in the year ahead, or really the next 2 to 3 years ahead? And our licensed operators were actually more optimistic than they had they've been in previous surveys. So while there was a group that thought we would be much worse, a majority of people actually thought we would be better or much better as we look at the few years ahead. So positive trends in the industry. Maybe that's just also part of being an entrepreneur in a startup space. You have to keep those optimistic views of the world in place, but some optimism around future profitability for the industry. Jay, that's just a quick summary of what we saw from this year's licensed operator survey. Hopefully, all of you found that representative of what you're also seeing in the marketplace.
Thank you, Tony. And I'm going to ask you to sit tight because we're coming right back. And I will note, because we want to respect everyone's time on this webinar is here, and I don't want people to ask very specific questions about their banking relationships, we won't be taking questions, although feel free to comment in the chat, whether you're tuning in on LinkedIn or our YouTube channel. And I'll be putting all the contact information for both Tony, obviously, but our guest today. So be on the lookout for that. And now I'd like to introduce the good folks you'll be hearing from in 1 second. First, Jay Caplan is the co-founder of Tuross Group, a leading outsourced accounting and financial advisory firm supporting the operational, financial, and compliance needs of the cannabis, hemp, and emerging psilocybin industries. With a team of 45 professionals and more than 50 active clients across California and New York and other developing markets, Jay's built Tuross into a trusted partner for operators who need rigorous financial oversight, smart tax strategy, and investor-ready reporting. Tuross Group works with licensed operators across the entire supply chain, as I mentioned, including cultivation, manufacturing, distribution, and retail, providing everything from day-to-day bookkeeping to complex 280E planning, 471C cost accounting, multi-entity structuring, and real-time financial visibility. The firm is known for delivering financial reporting that is 24 hours current, giving operators, investors, and regulators a level of transparency that is rare in the cannabis industry. And joining Jay is Jacques Santucci. He is the president and founder of Opus Consulting, a nationally recognized full-service business advisory firm supporting cannabis companies and their stakeholders from startup to turnaround, and offering management as well as fractional C-suite services to unlock performance in those businesses. He is particularly skilled at helping businesses navigate complex inflection points and difficult industries, and has over 20 years of experience in turnarounds and restructuring, frequently serving as a restructuring officer, court-appointed receiver, or turnaround advisor. His work includes court-appointed receiverships, bankruptcy proceedings, and financial restructurings, bringing disciplined execution and a practical, hands-on approach to each engagement. He's pioneered the receivership, frankly, for cannabis businesses in multiple states as an approved receiver for cannabis operations in my home state of Massachusetts, where he oversaw the first receivership for Vermont, and as the appointed receiver for the Source in Nevada, Glorious Cannabis in Michigan and Massachusetts, and Forefront Ventures, which has operations in Illinois, Washington, and Massachusetts. Under Jacques' leadership, Opus Consulting established one of the first full-service corporate consulting practices for the cannabis industry. He and his team have advised over 100 cannabis ventures on finance, operations, strategy, and facilitated the launch and management of numerous cannabis companies across the country. And as I mentioned, I'll link to both how to get in touch with Jacques and Jay as the program moves on. So with those introductions, joining Tony on stage, Jay and Jacques, over to you.
Well, Jay from Cultivated, thank you so much. And Jay Caplan and Jacques Santucci, I'm so glad you can join us today to talk about the results of our operator survey. And, both of you have terrific experience dealing with licensed operators who need access to financial services. Maybe to help our audience here, you can just give us a quick little tidbit of how you work with your clients and the financial institutions that they need to get business done. Jay Caplan, I'll start with you.
Sure. Thank you very much. So I've been in this space for about 14 years now. And my group, what we do is we set up and run the financial operations for cannabis operators all around the country, working with banks, financial institutions, payment processors, all of that, and really taking all that, organizing it, giving our clients, what I call 24-hour current financial information so that they're able to really run their business successfully and being able to see 2 and 3 steps ahead.
Terrific.
Yeah, and Tony, thanks for having me. Jacques Santucci, a little bit longer than Jay, but been in the industry for 15 years, and started as an operator and alongside of growing Opus Consulting, where so we got our experience as being operators. All our team members have been operators at some point or another. But our point is a little bit like Jay, but adjacent to what Jay was just mentioning, more on how to improve the operation. So we help people start their businesses, but also now we're on the other side of the spectrum. For the past 4 or 5 years, we've been doing a lot of turnarounds, cash management, and then receivership in the industry.
Terrific. Well, let's start kind of wide and then we'll go more narrow as we focus our conversation here. But thinking about the clients that you work with today and the challenges that they're facing with increased competition, tightening margins, where do you think banks and credit unions can do a better job to support licensed operators? Jacques, I'll start with you.
Oh, I was about to say start with Jay, but okay, start with me. At your conference, we had a chance to talk to a lot of the banks and credit unions. And, I remember talking to them about the disconnect between the operators and what they offer. And it feels like they need to communicate more with their clients and understand their needs. A lot of banks are talking about it, but it feels like there's still a disconnect between the offers and where the industry and the operators are going.
I think, Jacques, one thing that I overheard in one of the conversations that you had with one of our bankers is, when you're looking at these merger and acquisition transactions or the receivership transactions, there's sometimes the need to quickly open accounts and go through that process. And sometimes the bank process doesn't match the speed of what's needed for the situation that's at hand. Are you still finding that at times?
Yes, absolutely. Yeah, that's been one of the point of issues or challenge over the past couple of years is the speed of understanding what the situation is, going back to the communication, understanding what the speed is. The industry goes fast, and then having to wait 3-4 months to open an account because of compliance. I had issues where in a receivership where they were asking information from all the owners. And some of those owners don't want to talk to the receiver anymore, or there's too many people and you can't find them really. And so that slows down the process of the merger and acquisition or the receivership or whatever the issue is, or even buying a new company. Yep.
Jay, from your perspective, where could banks and credit unions do a better job to support the clients that you're working with?
So I think I'll even step back a little bit. So from the early days of cannabis, I would say the banks and credit unions are far better than what they were 10 years ago. Where I see things today, some of the challenges, giving you a couple of examples. So setting up accounts like Jacques mentioned. So when I advise a client, I like to have multiple accounts for 280E strategies and some of the other things that we can talk about. But like, for example, last week, I like to set up a reserve account or a ring fence account for taxes. Right. So it's part of that licensed entity. I like to have that kind of in a savings account, one step removed from operating account. If I was a real estate operator, it would take me a day to get that account set up. In cannabis, it takes a little bit more time. It's still better than what it was years ago. But I guess my point is, if the banks and credit unions treat us like any other business, and you're starting to see that. And I think in a competitive landscape, providing cash management services, lending, real estate, some of those others, the banks that aren't willing to treat us like any other business, they're going to miss out. The banks that are starting to offer those additional services, that's where the industry is really going to gravitate towards.
You're kind of along that same vein. Our survey shows credit availability is a major challenge for the industry, with over 40% of operators reporting that credit is not available. How would you describe the current state of the lending market for licensed operators, knowing that and think about this in terms of bank or credit union lending, not so much private lending. Jay, what are you seeing in terms of lending availability for your clients, for what they have access to versus what they would actually like to have access to?
Right. And so, my previous career, I was a banker, so I do understand kind of the underwriting guidelines and some of the other things associated with that. And I understand the credit risk associated with that, but with that, building efficiencies, buying equipment, buying real estate, the availability of that capital really helps these operators, in my mind, be successful. If they're not able to automate, they're not able to buy the real estate, they're tying one hand behind their back in their ability to be successful and compete. it's a double-edged sword, in my opinion. If the bank's willing to offer, I call it single-digit financing, to be able to make that operator more efficient, it's a win-win situation for both. When you get into that private world, and I know that you excluded that from this, but I advise my clients when they're getting into the 20-30% cost of capital, it's just so difficult for them to get out from underneath that. I really push them to avoid that. So really in that scenario where the bank capital is not available and the private hard money capital is there, it's such a disconnect, and that capital is so expensive. I really push my guys not to go forward with that because it handcuffs them in their ability to be successful.
Yeah, it can be. Those terms, not just the interest rate, even the terms can be pretty punitive.
Yes.
Jay, you've seen it from the other side, on the receivership side, where those transactions didn't work out, whether that a bank lender or a private lender. But in terms of lending availability overall, what are you seeing, and any positive trends that you can share with us?
Yeah, concur with what Jay was saying. It feels like things are changing a lot over the past couple of years. More banks and credit unions are lending. Going back to communication, I think lending can happen if the operator understand what they need to do, and then work with the bank to get there. Working with people like Jay or us or other people, try to get them there. But it feels like capital is available. It's the private capital is very expensive, but I would not be surprised in the next 12-24 months we see the cost of capital going down, because more lending would happen from regular banks or banking institutions. Again, understanding, working with the operators so they understand how they can get there, so it costs them less money.
Yeah, I think in an environment where bankers have a limited appetite to lend, they're going to look for the very best collateral. And obviously, bankers prefer real estate as probably their first choice for collateral. And then they're going to look for the very best operators, right?
But there's a question of speed too. In a previous life, I was the CFO of a private lender. Yep. And people, was around real estate, people were coming to us because of speed, right? They had a quick purchase or a rehab, and they couldn't wait to do a lot of the paperwork. And sure, it was expensive, just like it is for cannabis. It was expensive. So I think it's a little bit the same thing. Some people are going to private lending, and it's, I understand why, but it's expensive, and it could lead to more troubles. That's most of the receivership that's happening is because of that. But if the bank or the banking institutions work on the speed and in educating people, then I think we're going to see people understanding that they can actually find the money in a better way.
One of the things that came out of our operator survey, the number one and number two concern of licensed operators that we surveyed was, one was cash flow, second was profitability. Obviously, those are highly correlated to each other. Usually pretty important for bankers too when they're making credit decisions. Jay, what are you seeing in terms of just improvements in profitability or cash flow with licensed operators, understanding that is a driver for the banks to be willing to lend into these operations?
Yeah, so that's always a big challenge. And, a lot of operators, they really struggle with this, right? I call it from the time that you put a seed in the ground to you revenue from a retail store, you're talking 6 to 9 months. So someone has to kind of carry that cost all the way through that cycle, giving our clients kind of current and accurate, I call it 24-hour current financial information that gives them better decisions or better tools for them to be able to make those decisions. A lot of these operators are flying blind. They don't know what their cost structure is. They're just going into this waiting 6-9 months to ultimately get paid. And then when it comes back out, there's no margins, there's no cost accounting. They're really struggling to kind of build the tools to be successful in running their operation. Now, you don't necessarily have to get down to the penny, but, having a good control of your cost and, building out your financials. Most of the operators, I call it, they look at their financials, vertically. I like to build that out horozontally. It's great. We're going to spend $1 million, but if we're not going to get paid for 6 to 9 months down the road, what does that look like as you're kind of building out a monthly, P&L and projection? And the bankers really want to see all of that, right? They don't want, bankers aren't going to lend on future what ifs, right? They want to see kind of current financial information and where you're looking at from a P&L perspective today. Not if these 10 things have to happen perfectly that I'm ultimately going to have a profitable business.
Yeah, we all know there's a wave of companies that are getting in trouble over the next 12 to 24 months. But behind it, I'm starting to see it. Who is buying the assets? There are groups that are well funded and well organized, and all they have in common is data. They all invested early on in accounting, in data, in relationships. And I think the companies that did not invest in a good accounting system, in data analysis, in budgeting, like Jay is saying, and having the right strategy, it's going to be a struggle.
Jacques, as you've looked at these, the restructurings that you've done or the receiverships,
yep.
Obviously there was something in the structure of those businesses that caused them to fail. You're restructuring them for success. Yep. Is the big difference that the assets are just now priced more correctly, or are there other fundamental things that change between the failed business and the continuing operation? Obviously, there's a good enough business there to see it move into the future rather than just close down. So I'm kind of curious, because from a banker's perspective, kind of differentiating between the person likely going into receivership or the person who's got greater likelihood for success.
Yeah, so they're all a little bit different, right? They're all coming from a different angle. The common denominator is over leveraged, and the future did not happen, right? And so they borrowed too much money. They did not invest in the right tools, right? Sometimes too much on production, not enough on growth, and at some point the market turns, and they didn't want to believe that it would happen. I think that would be the common denominator. Overall, don't want to criticize, people, because I think they were all trying to do the best thing. I want to believe they were all trying to do the best thing. But there was an unrealistic, and there may still be an unrealistic view of the future. A year and a half ago, a lot of people were banking on rescheduling and legalization, and I think we should all prepare for the worst. And that's that's the way it should be, and have a better handle on future cash flow and what is my strategy for 2 years from now, not for next month.
We're still seeing folks that are hopeful that 280E will go away and have taken steps to limit their cash out related to 280E with hopes that it will change, or filed for those previous amendments to their tax returns. For bankers, a future tax lien is a big risk. Where are you seeing the risk appetite right now when it comes to 280E actually being resolved? Because I think if we would have talked last December, there was quite a bit of, or maybe November, there was quite a bit of excitement about it being resolved. And I'm getting the sense there's less excitement about that right now. Jay, I'll start with you.
So, in speaking directly with the IRS, my opinion is 280E exists for cannabis operators. I think people take different interpretations. There's a lot of groups that ignore 280E. I understand kind of that methodology. What I advise my clients, if you're going to ignore 280E, at least do a calculation of what your 280E and your non-280E exposure is and reserve that capital in the event the IRS does show up, rather than spend that. I know that a lot of the MSOs and publicly traded companies are holding, very large, call it tax liability on their balance sheet, which I think is pretty risky. I advise my clients in today's world, you're better off taking kind of an aggressive approach with different entities and some of the creative accounting methodologies that people use, and assume 280 exists. But I think it's a big risk, and I don't know what the bankers ultimately would say, but I think it's a risky strategy ignoring 280E today.
I agree with Jay, and I'm from the opinion that I'm going to ignore the future because I don't know about it. When I started, the first time I went to MJBiz, it was in the back of the Rio. It was during the Obama administration, and everybody was talking about that before Obama leaves the presidency. Cannabis will be legalized, and I think we were 2 or 3 presidency after this, and it's still there. So for me, I think 280E, I agree with Jay, exists, and you optimize it. work on your numbers, have good accounting, and study it and reserve for the future. And also, a lot of companies are banking on the letters. The term is escaping me now.
But opinion letter.
Opinion letters. Thank you, Jay. And but those opinion letters are only avoiding potentially the fees and penalties. They're not avoiding 280E. So that means you still have to be careful that with what you're doing. I think the best approach is get the opinion letter. Then at least you can save on potential fees and penalties and optimize your strategy on 280E. But you still have to recognize that 280E exists.
Yeah, makes sense. So switching gears a little bit, one of the things that we found in the survey this year was that while yes, lending is an important service that many licensed operators would like to see, we also saw that more access to sort of money movement and payment tools was high on the list, especially when it came to wholesale transactions, how they can better execute those transactions at a lower cost. What are you seeing in terms of payments between license holders, and how do you advise your clients to be as efficient in that as possible, given that we saw that almost all of the activity today is checks and ACH?
Jay? Okay, so I really don't like paper checks. I think that's a big risk, and I know bankers talk about that all the time. I really try to stay out of that and really get into ACH and wires. I think with availability of banks and operating around the country, there's less and less kind of cash that's kind of flowing through the system these days, which gives me much more comfort. Also, most of my operators, I get credit cards for the non-cannabis related expenses, which just makes it easy to reconcile and keep track of. But I would say from a risk perspective, first is paper cash, which is always a challenge. And then second is kind of the paper checks. But with the banks and kind of, operations around the country now, I think kind of the baseline, paper check to ACH to wire seems to be available and, fairly consistent around the country.
And then I agree in wholesale and retail that would work. But on the retail side, and maybe a wholesale, but on retail side, payment solutions are also a marketing tool. So as much as we still need to use cash, right, because Visa and MasterCard are still not allowing us to get credit card payments, there's a lot of tools. I know a few banks are coming up with apps and ways of accepting payments from customers at the retail level. And then, we have all those, cashless ATM, which are really not ATMs, but the alternative payment solutions that are available to customers. I think the more those can be in the stores, the better, because then it avoids having that paper cash and then all those transports. And I'm hoping that in the next 12 to 24 months, all those things going to loosen up. I mean, I'm hoping 280 is one thing, but safe banking is what we need, because the sooner there's better ways for those companies. I mean, $30 billion industry that is still mostly cash. The sooner this can go in your clients' bank accounts, right, or accounts, I should say, not bank accounts. The better it will be.
Yeah, I would agree. In the minute we have left, as I think one of the things that our bankers always love to hear from you all is, what advice do you give to your clients so that they're more bankable and more a better credit risk? Jacques, I'll start with you.
Yeah, I had a conversation last week with the bank, and we were exchanging stories about their clients showing up for the first time. My advice to all our operators is you have to act like you are any other industries. The cannabis industry is just a name. We should all act like it's the best industry ever, and then be respectful, be proper, business 101, have good books. When the bank can provide, ask to get financials, they're available within an hour, and they well reconciled, because that's how you create the relationship with the banking institution, and they start trusting you. I mean, I know AI is all around us, but at the end, we're still human. So there's a trust relationship that needs to happen.
Yeah, and I think I would just add to that, knowing the questions they ask ahead of time and having the answers, right? Yeah. Acting professional, knowing what these banks are going to look for, and having all of that organized. If a bank asks for 12 things and it takes a month to get it back, the banker looks across the table and says, you guys are knuckleheads. I don't want to deal with you.
Yes.
Yeah. Well, Jay and Jacques, we always appreciate your insights. Thank you for taking time to join us today. Jay from Cultivated, I'll pass it back to you.
Thank you.
Thank you.
Tony, Jay, and Jacques, thank you so much for your time today. And to Tony, I want to thank you and the Shield Compliance team for your work and support of Cultivated and for making this webinar happen. I also put a link to Shield Compliance for those interested, as well as how to connect with Jay and Jacques directly. As always, please follow Cultivated right here on LinkedIn if you're watching, or on our YouTube channel, or at cultivated.news. And we'd love if you could follow our newsletter, get it in your news box every morning at 8 a.m. Eastern at cultivated.news. Have a great afternoon or morning if you're joining us in a different time zone, and have a good holiday season and Happy New Year. We'll be back with our webinar series starting in January 2026. Thanks, everybody.